What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall markets. I'm going to break down more details about the August pullback that could be coming, talk about what this means for the market moving forward, and some important things to watch for when it comes to price action. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link that's down below, or sign up with my QR code that's right over here. Moomoo is an amazing global brokerage that consists of many exclusive offers. If you sign up and deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 25 in total. And deposit $5,000, you're guaranteed 60 free stocks. The offer ends in just about 12 days from now. Another benefit of signing up is that you're going to qualify for free data to look at what's happening with order flow and the overall options chain for your different tickers and ETFs out there. So check out my link down below if you guys want to sign up, or use this QR code that's right over here. Anyways, now let's talk about what's happening with the overall stock market. So I wanted to just let you guys know that the way the market moves is through an algorithm. There's an algorithm that is dictating price action, and there are robots that are once again in big effect with the way the market ends up moving. So I say that because, at certain levels, when the market starts dipping, you have these institutions that start buying up the markets at particular levels, and then they also start selling once we end up hitting certain phases. I believe that the news is noise, and they're using this noise as an excuse to cause more price action that benefits these market makers. That's my general consensus of the markets. So what does that mean? These institutions, these hedge funds, these market makers, whatever, I want to put it out there that they're all kind of like involved with each other. They are basically in control of this market. They could choose when they want to pump things really hard or dump things with the cash they have on the sidelines. Now, they know what we're doing. They know if retail are going shorts. They know where the stop losses happen to be. They know what's advantageous for their own selves. And they're going to do what's advantageous for their own selves, because when everyone was expecting a crash, when people are shorting the market every single week, they're going to continue to cause the market to squeeze. So I believe that for the time being, the market still is bullish in terms of price action. And, we are still bullish because we haven't really lost critical support to turn bearish. That's why you want to follow the trend and watch your levels, because that's the best thing to do when there is uncertainty. Why is there uncertainty? Well, I don't know exactly what news is going to come out, right? But I do want to tell you guys this based off historical trends. What tends to happen after election years is that the market rallies very hard until the end of July. And then as we get to August, the market starts to pull back. Even in September, that tends to happen historically, the large majority of the time, before we see a big rally that happens around that October to November period all over again. This is the most typical historical trend that tends to happen. If you look at, for example, the weekly time frame, and you go back to the different months out there, you could see there's a very, very interesting pattern right over here. Because if you go back to, say, like 2022 or even like 2023, the same patterns exist, right? In 2022, the stock market was already on a downtrend, but we ended up seeing our bottom between that August and October period in 2022. Then we saw a rally after that. So the market started to rally and rally and rally up until July of 2023. The market from the top, I would say at the very end of July. Then we got about a 2-month sell off up until October. And then from October 2023 and beyond, we just continued to rally. For 2024, we were on a very, very big uptrend, but it was also the election year. So, of course, that affects things. And typically during election years, the market tends to be very bullish because nobody wants, these politicians can't have the market crashing too hard when it's going to be their year. So keep in mind that we also formed the top on July 15th in the mid-July period. And then we pulled back for about almost 4 weeks up until August, and then the market saw a little bit of a rally. It came back down in September, only for us to continue to rally. But in this case, we're rallying. We've been pushing very hard for a couple of months, and now we're approaching that very, very bearish time in August, and there could be some kind of pullback coming. I also want to note that when you look at SPY and look at the daily time frame, not only does seasonality suggest that, but we do have these gaps here. So this could be a good target, this like gap, which is close to where we saw our previous resistance becoming support at that 600 area. That could get filled. There's also another gap down here at like the 560s, which might be a little bit too high. I'm not sure if we go that low. That might be too high of a drop, but we'll see though. You never know. We're just gonna have to watch the levels in real time. But I do think this is a very reasonable target, the 600 area or below for August/September, or even lower in case that fails us. But then we could bounce again and continue to rally, as that's what typically happens, right? If you look at this like August period right over here, this was when the market was dipping during this August to September period. But then in October, that was a dip buying opportunity for an end of the year rally. So that is what could be coming. Now, why is the market going to sell off? Well, I don't know, guys. Could it be because of President Trump's tariffs that are going to be imposed on August 1st if we don't see enough deals? Maybe. President Trump is saying there's going to be a lot of deals coming with the EU and many other regions. So that could be something that kind of like offsets this, but that could be one factor. The tariff news. Another piece of news could be FOMC. One interesting coincidence is that on the almost the last day of July, we have FOMC, and we're going to see if Jerome Powell says anything. Keep in mind that we did see an increase in inflation. So if inflation continues to go up, that could scare the markets. That could be another factor. The market might start to sell off after FOMC on July 30th, which aligns with that August period, very close to that. Another factor could be what's happening in the Middle East. If we see oil prices surge because of tensions, that could be another factor, right? There's so many factors out there, and I don't truly know which piece of news they're going to use, but I do want to tell you about the risk in August, at least nonetheless. So this is the pattern that typically happens. Typically, what happens is the market tends to be a little bit bearish in that February to March period. If you look at our charts, we didn't really have a period like that, at least for this year. We remained quite bullish. We did see a little bit of downside though after the year started, basically in that like February to March period, and we saw the tariff news cause us to dump in April, which is when the market bottomed. And since then, we've been on a historic rally. So keep that in mind. The market made a full V-shaped recovery. But there is going to come a time when we do see another pullback move to fill at least one or two of these gaps. And I believe it's going to be starting as soon as August based off seasonality, the fact that we have these bearish divergences, and also because of many other indicators I showed you guys in my previous videos. So do I know what the news is going to be? No, I don't know what the news is going to be, whether it's like tensions in the Middle East, if it's oil prices starting to go up, if it's the tariffs, could it be we see a big surge in inflation? Could it be the Fed? There's so many possible factors, and it does not make sense to try to predict everything. What I do want to tell you is that there is that risk of downside, and when you look at SPY on the 4-hour time frame, we're going to be watching to see if we get confirmation of that move. Now, right now, the chart is bullish. Right now, we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We're still technically on an uptrend, and we could continue to uptrend with big tech earnings and such, right? But as we're going higher, the bearish divergence is getting bigger and bigger, which suggests that once we get very close to that August period, right, there's going to become a time when we form some kind of top, and then we could be looking for some kind of pullback move again. A very significant pullback move, which is typically around 5% or so. We could be looking for a move that's just like this. I don't know how low we're going to go, but I do want to say that there is a gap to fill at 600. I do think we could be getting back down there. But for now, the market is bullish and we're not ready to see that downside. So you need to see a break in market structure. Right now, we're making higher highs and higher lows, and there's no sign of us losing structure yet. If we hypothetically get a big rejection and we come back down here, if we start to turn, let's say we just rally a bit higher with big tech earnings and we form a top, and then eventually we see a pivot. So we lose support here. Then we start trending towards lower highs and lower lows, and we see SPY lose like 625 again. Then there's going to be a risk of us returning to new lows. We could be looking for rejections if we see a shift in structure. Right now, we're bullish, so we're going to likely continue to uptrend, but there could be a big move down coming eventually as we have bearish divergences and also because of seasonality. For the QQQ, it's the same thing. As you guys could tell, the triple Q is bullish, higher high, higher low, higher high, higher low. So it may dip a bit before it tries to balance, but it's still technically bullish and it's going to likely continue to uptrend. Now, as it continues to uptrend, the problem is that as it pushes towards like the 560s, this could turn back down once we get closer to August. And we need to see structure change. We need to see us lose a lot of supports like at 555, for example. And that's going to be your confirmation that this is about to change directions. There's no sign of a directional change yet. So we're still technically bullish. And there's no sign of us turning bearish yet. So we could continue to uptrend for now, but there's going to likely be a pivot in August based off seasonality and based off the bearish divergences that are still developing. The QQQ, for example, also has a double bearish divergence. Also, there's like a divergence that's developing with this. And there is this gap I'm watching. There's a gap all the way down here at 531. I think we will be coming back down to fill that gap. Possibly, I mean, there's another gap all the way down here at like 490. I'm not sure if we go that low, but I do expect this gap to likely get filled at least at 530. So we're going to see at least a 30 points dip in that August to September period. So be prepared for that once the time finally comes. For now, we're bullish. SPY, the QQQ, the Russell 2000, everything is still bullish right now. We're still making higher highs and higher lows, right? The Russell has not lost at least like 219 to start dumping. There's no sign of that yet. ES is still bullish. It has not lost our daily 20 EMA at 62.50 to turn more bearish. No sign of that losing support. There is this gap down here to fill though around 57.50. And then there's also this imbalance down here at around 59.60. So those could be some potential targets to watch for. I'll be watching to see if we end up pulling back. On NQ, there's a gap down here at 20,300. There's also this imbalance over here, which would take us down to the lower 21,000s. So, like I said before, guys, we could be looking for some kind of pullback move. Tesla's looking bullish going into its earnings, but we're going to have to see what happens after earnings for a much larger move. So, in summary, the market is bullish. We're making higher highs and higher lows. We're still bullish right now. So, we're going to have to watch and see when we lose support. We have to see this start to trend downwards for us to turn more bearish. We're not ready yet, but seasonality, the bearish divergences, many confluences, and the fact that there is about a 95% correlation with this year and what we saw last year. There's a very high correlation right now with the markets and with what we typically see during post-election years. So there's a very, very good chance we're going to see some kind of pullback in that August-September period before we rally again in October, November, and December. I think that's very probable, but I don't know what the factor is going to be that causes this. It depends on what these market makers choose. Is it going to be FOMC? Is it going to be Jerome Powell? Is it going to be inflationary data or President Trump's tariffs? We'll see about that. So make sure you're ready just to be safe. Something is going to happen and something's going to cause the market to dip eventually. I do think there's a very good chance of that. Another reason why I say that is because the market can't just pump forever, right? When you look at the monthly time frame, what typically happens is you get very, very bullish periods. So, for example, right here, we had like many months of green, we pulled back a bit. We get many months of green, we pulled back a bit. We had many months of green, we pulled back, and then we've had a couple of months of green. So I do think that as we approach that August period, coming back down a little bit before continuing to rally is what's going to likely happen. And I think it's going to be very, very interesting. When we dip in August and September, if we do dip to like 600 on SPY or even like the 590s to 580s, or if the QQQ dips to the 530s, if not the low 500s, I see those as buying opportunities because the market will rally again afterwards when we get to like October, November, December. So keep that in mind. The overall monthly on SPY and the QQQ are still bullish. Even if we do pull back for like a month or two, in August, September, we could still rally again afterwards. So I hope that's as clear as possible. I know I'm going a little bit ahead when I'm saying that, but I just want to give you guys a heads up about the opportunities that are likely going to be coming. So what do I think the market's going to do? For now, we're bullish. July is arguably one of the most bullish periods of the year, and there's a good chance we likely continue to rally. So we may continue to uptrend for now, and more buyers may continue to step in because there's no sign of us rejecting and getting major downside on SPY quite yet. But like I said before, I'm going to be very cautious going into August and September, and there could be some kind of pullback for whatever the reason is, and then that's going to be another buying opportunity. So I hope that's as clear as possible, guys. I hope I clarified a lot of your guys' questions. And then for the VIX, I know people are asking me about the VIX. Well, when you zoom out of the VIX and go to our weekly time frame, what you'll see is that the VIX is not just dumb forever, right? It loves to eventually retest the 20s, right? We've had many instances in the last couple of years. We see a lot of volatility spikes in the 60s, back to the 20s, back to the 20s, back to the 20s. 25, for example, here it hit 25, here it rallied to 63, here it hit 25, here it hit 23. So the VIX could dip to the 15s if it continues to fall. If the market keeps rallying, yeah, let them dip it to the 15s, to 14s. But eventually, I do believe that there's going to be a test of at least the 20 plus area again or above. And that's actually a significant move up because if you're all the way down around 15 and pushing to at least 20 plus, that's a big upside move coming to the VIX. And there could be a lot of money to be made if you guys buy in the money calls on this maybe like a month out or 2 months out. That could be very, very good, and you guys can make a lot of money off this. Even the triple leveraged ETFs can make you a lot of money, whatever you guys want to play. But I'm just trying to say that a good hedge could be VIX calls, maybe in the August to September period. I think that's going to be a very, very good play. I'm not saying to enter them yet, though. We may have to see if this dips a little bit more, but it's up to you guys if you're willing to hold for that long. Also, we're nearing a bullish cross in the PPO on the weeklies, so maybe it dips a bit before it starts to rally the closer we get to September. And when you look at the daily on the VIX, another thing is when you look at the daily, what you'll see is that there are some unfilled gaps. There's actually some gaps like that are left up here, such as this one right here. There's another one up here around the 37s. There's a lot of unfilled gaps, which I think will eventually get filled again. So for now, you could also interpret this as a falling wedge that's on the daily, and the VIX will eventually break out. That could be another sign. But I do believe we're going to return to at least the 20s, if not as high as 25 plus. So I think it's going to happen within 2 months. So that could be another opportunity for those who want to hedge. Anyways, that is it for my video. I hope this video was helpful for you guys out there. The market is bullish for now. The VIX is bearish for now, but there's going to likely be a big pivot coming based off seasonality and based off what the trends suggest. We'll see what happens with President Trump's tariffs. We'll see what happens with all this news coming out. We're going to see what happens with, the Middle East situation, with the Fed. There's so many things coming the next 1 to 2 weeks. So be ready, guys. I thank you all so much for listening. Peace out.